Welcome to News C Learning Podcast. Creating a personal financial plan. No one cares more about your financial well-being than you. Therefore, making a financial plan for yourself is critical. A strong financial plan will enable you to save money, purchase the things you truly want, and reach long-term goals such as college savings and retirement planning. Now let me take you through what is a financial plan. A financial plan is a roadmap for an individual or a company to reach its goals. It takes into account your existing financial situation and goals, then creates a detailed strategy based on your prioritized objectives, telling you exactly where to spend your money and when to save. Additionally, financial plans help you prepare for the unanticipated by having you set aside a pot of money. When an unexpected job loss, illness or economic downturn occurs, you can rely on these funds to cover your day-to-day expenses. Essentially, you can use a financial plan to take control of your money, such that you can achieve your goals and ease worries you may have about your well-being. In the past, people had to hire a professional to create a financial planner for them. But with the advancements in technology, you should be able to create one on your own. It's pretty easy with a financial plan template, which you can modify to reflect your own goals, cash flow, etc. What is a personal financial plan? A personal financial plan is a documented analysis of your personal finances, including your earnings, liabilities, assets, and investments. Its purpose is to help you assess the feasibility of your personal goals and to understand the steps that you will need to take, money-wise, to accomplish them. Your personal financial plan can stretch over weeks, months or years, based on the estimated completion time of your goals. And you can adjust it at any time to reflect new or changing priorities. Determine the type of financial plan you need. Part of learning how to make a financial plan is determining what type of plan you need. Don't think that it's too early or too late to have a financial plan. Quite the contrary, now is the perfect time to start. First point. Create a financial plan for yourself. If you're single, it's important to establish a solid financial plan that not only helps you meet your immediate goals, but that ensures your future self will be taken care of. This means doing all the things mentioned above without making any assumptions that things will somehow work themselves out. A big mistake is assuming you'll meet someone who will take care of you and deal with the finances in your relationship. If your relationship status changes or you get married, you'll be well equipped to plan your finances together if you already have things in place for yourself. Second point. Create a financial plan for your marriage. If you are married or have a significant other, then you need to participate in your finances as a team. Discuss your budget and money goals and make financial decisions together. Understand where your money is going and how much money you have in savings and in investments. Should you have joint accounts or separate accounts? Having joint accounts is great, but I also believe in having your own personal savings accounts. As women, it's important for us to build our own sense of security and have our own that we bring to the table. But don't feel like you need to keep your personal accounts secret. Remember, marriage uncommitted relationships thrive on openness and honesty. Regardless of whether you team up with your partner or go it alone, the path to financial independence is not always a smooth, perfectly paved one. But don't despair. It's time to roll our sleeves up and get our hands dirty. That's right, it's time to learn how to create a solid financial plan. Determining what kind of fiscal plan you bear is an important part of learning how to make a fiscal plan. Do not believe that having a fiscal plan is too early or too late. On the negative, now is the stylish time to begin. First point. Write down your financial goals. Having financial goals is the foundation for your financial success. After all, you have to know what you want to accomplish in order to actually accomplish it. However, when it comes to setting goals, you want to make sure your goals are well defined and prioritized accordingly. It's great to have big, lofty goals, but be sure to break them down into smaller chunks. That way, you're not overwhelmed trying to accomplish them, and you can easily measure your progress. Second point. Start an emergency fund. It's also really important that one of your goals includes a plan to deal with emergencies. You want to make sure you are prepared to weather a storm. Otherwise, you'll just end up in debt again. Third point. Pay off debt. When you create a financial plan, be sure it includes a plan to get out of debt. Sadly, you can't really kickstart your financial future if you are carrying a ton of debt. Between sky-high interest rates, large minimum monthly payments, and lots of debt can damage your credit score. You're better off paying your debts first. Create a debt payoff strategy, and be patient but consistent when working toward becoming debt-free. Fourth point. Create a financial plan to invest. If you are serious about building wealth, then you're going to need to put your money to work for you. This is where investing comes in. However, before you put any of your hard-earned money into investments, it's important to have well-defined objectives. Think about what the investment is for, when you'll need your money, and what your risk tolerance. As investing is a long-term activity, so you have to commit to it if you really want to see your money grow. Worried that you'll need your money in the short term? Well, that's what your savings accounts are for. To put aside your emergency savings and money for your short-term goals. You also want to make sure you have a basic understanding of any investment you put your money into. For example, the stock market, real estate, or small business. Your plans to invest should be included as a part of your monthly budget, where you allocate a certain percentage of your income toward your investment goals. Fifth point. Get the right insurance. After working so hard to earn your money, the last thing you want is an unplanned occurrence to wipe you out. Insurance is essentially your backup plan that will protect your assets in the event a life circumstance happens that requires a large amount of money to resolve. Your insurance coverage should include health, auto, disability, life, home or rental, and business. Basically, you want to protect anything of major importance that has a high value to ensure that you and your loved ones are protected financially. Having the right insurance can turn what could otherwise be a major disaster into a mere inconvenience. Sixth point. Create a plan for retirement. In order to have the lifestyle you dream of in retirement, you need to plan adequately for it. You'll need to determine how much you are going to need to retire, of course taking inflation into consideration, and how you plan to save and invest in advance for that period of your life. While retirement might seem like a lifetime away, it's never too early to start. Planning for retirement is how to make a financial plan that will enable you to live life on your terms when the time comes. Seventh point. Plan for taxes. Taxes are annoying, but they're certainly not going away anytime soon. So make sure your long-term income projections include taxes. Not planning for taxes can impact your cash flow in a major way. In addition, you definitely want to look into tax savings investment options. and stay up to speed on any relevant tax deductions you can apply to help you save money on tax payments. You can plan to sit with a tax accountant or financial planner to help ensure your plan for taxes is adequate. 8th point. Create an estate plan. Estate planning is not something a lot of people like to think about, but it's essential. It allows you to determine exactly what happens to your assets after you are gone. It involves listing out all your assets, creating a will, and making it accessible to the people who need to have access to it. A financial planner or estate lawyer can help you set things up correctly. 9th point. Review your financial plan frequently. Once you have your financial plan outlined and churning along, it's important to review your plan frequently and make the necessary adjustments if your goals or the circumstances around your life change. For instance, maybe your insurance needs to change, your risk tolerance changes, or you get married or have kids. At a minimum, you want to check in on your overall financial plan at least every 6 months. When you check in frequently, it's easier for you to deal with unplanned life occurrences, bounce back from setbacks, and accomplish your financial goals. Think about what you do to maintain your personal health. 10th point. Stay the course, avoid overspending, and learn from your mistakes. Your journey to financial independence won't always be easy. There will be some tough days, weeks, and even months. Have a solid plan for your finances, be disciplined, and avoid overspending. You'll find out how great you'll feel when you really make a concerted effort to stick to your budget. As you work on your finances, you may still make mistakes with your money, and that's okay. Sometimes you might be unable to resist the urge to buy something that isn't in your immediate budget. And sometimes, you will feel like ripping your entire financial plan to bits because it just doesn't seem like fun. However, as long as you keep your reasons why you want to be financially free in focus and make an effort to rebound quickly from your mistakes, you'll do just fine. It's all about assessing the mistakes you made, understanding why you made them, and making a plan to avoid making them again. Then, you'll need to take those lessons and apply them to your future success. Thank you for listening to this podcast. This podcast has been brought to you by newsy.com.